Be Wealthy and Smart, episode 1330.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the first quarter being the strongest since 2019. The stock market has been on a tear, mostly due to this AI narrative, which is impacting the largest tech stocks, the Magnificent Seven, which is really the Magnificent Five since Apple and Tesla are not as strong this year. But the AI narrative is going to impact every single company in the S&P 500 because no matter what their size, they're all going to have an AI strategy. It's like when the internet came out, everyone had to have an internet strategy. They didn't know it at the time. They thought .com was a little bit overblown, and they didn't understand how every single company was going to be impacted by the internet. It's the same thing with artificial intelligence. But what's really astounding is not just the first quarter performance, but the fact that the S&P is up 27% since the October 2023 lows. That's something not many people are talking about. Spectacular returns for the S&P 500. Now, they're so strong, it's really been a lot of the AI narrative, but also the talk of interest rate cuts. Last year, we thought we were going to get more interest rate cuts, 5 to 6 cuts this year. Then we went all the way to maybe they won't cut, and maybe inflation will stay higher for longer. Now we've rotated back to 3 cuts from the Fed themselves telling us that they will probably make 3 cuts this year. It is an election year, so it's likely that they will be cutting interest rates. I thought since last year the first cut would come in May, but now it's looking like it could be June. And whether we get the rate cut in May or June, I think it's still going to be a buy on the rumor, sell on the news kind of scenario, and that may be when we get our pullback that we are definitely overdue for. With the S&P on track to have 2 straight quarters with a return of more than 10%, this is the first time that's happened in more than a decade. That's how special this performance is. The S&P finished the quarter up 10%, and the last time the S&P finished 2 consecutive quarters with gains of more than 10% each time was 2012. And it's only happened 7 times going back to 1945. Now, today, the markets are closed, but some very important information came out. And this is key information on inflation. This is the data that the Fed looks at to gauge inflation and see whether they're ready to make a rate cut or not. Something really unexpected came out in this report today. And that was that spending was very strong, much stronger than expected. Pretty much everything else was in line with estimates. So the data was called the Personal Consumption Expenditure Price Index. And that excludes food and energy, and it increased 2.8% in the last 12 months and was up 0.3% from a month ago. Those were right in line with estimates. Rising energy costs pushed up the reading with 2.3% increase. The food index was up 0.1%, and goods were up 0.5% compared with 0.3% for services. Other inflation pressure came from international travel services and air transportation, insurance, and financial services. And on the goods side, the motor vehicles and parts category was the biggest contributor to inflation. So the unexpected data was that consumer spending shot up 0.8% for the month, which it had only estimated to be a 0.5% number. And that shows that the consumer is very strong, which is good news for the economy, but not so good news for inflation statistics. Personal income was up slightly less than expected at 0.3% versus a 0.4% estimate. So what happens next is the Fed will release its next decision on May 1st, and then may begin cutting at the June 11th and 12th meeting. The Fed has basically said there's going to be 3 25 basis point, 0.25% interest rate cuts this year, and in 2025. So while we didn't get any extreme weakness in the numbers today, they pretty much came in as expected with a stronger consumer, which some people are saying is of concern and could show that inflation may be stickier than we want. But I think what it's saying is the economy's holding up, the consumer is stronger than most people think, and while the Fed isn't seeing the weakness that they want across the board, I think now that they've announced they're going to do 3 rate cuts, they're under pressure to probably give us that one, if not in May, then in June. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.